So there's 4 things that you should know when you're opting into car insurance or auto insurance. There's a lot of stuff you should know, and that's what this channel is here for. But in general, there are 4 major things that you should look at when you're purchasing a vehicle and deciding what insurance you're going to go with. The first thing is to know the vehicle that you're looking to purchase. If you're going to buy something that's fairly new versus something that's a little bit older, that's going to play a fairly large impact on your insurance premium. Not only just the cost of it, but some of the safety features help determine what the risk is of a bodily injury in the case of an accident. For example, if you drove a CJ Jeep, 95 I believe, or 93, that's almost impossible to insure because those were known for having little roll cages and people fell out of those vehicles. They weren't very safe. If you were rolling over or turned too sharply, they were top heavy. So that was a vehicle that would have a low safety rating. Now, most of the vehicles in today's age, in the 2020 and beyond, and 21 and whatnot, is going to have those 5-star ratings. But there are a few cars that people don't realize are a 4-star rating. So that's going to cost you a little bit more money out of pocket when you have that lower level of rating on the car that you're looking for. The other sub piece to that is when you're choosing the year of the vehicle, if it's too new and you have to get a loan for that, you're going to have full coverage. You have comprehensive and collision. Those are the 2 pieces that are required to protect the loan in case something happens or in case you can't pay it off. That's just an agreement that you have with the financing company. The other piece is if you want to have full coverage, that's going to cost you about 20 to 30, sometimes 40% more on your insurance premiums. The second part is similar to what we just talked about, is the coverage that you want. So it really depends on what your future looks like. If you're a younger group, then you're going to want to look at what's my future income going to look like, or what is my plans for the future? Because you're not just protecting you today, you're protecting your income going forward. For example, if you got into a car accident and you totaled out someone's car and injured them, and it was $7 million, let's say, and that case, they're going to come after you because your insurance isn't going to be enough to cover their medical or whatever bills they have. So what they're going to do is they're going to dock your pay. Just like if you were trying to hide from the government, they would dock whatever paychecks you got. And nobody really wants to spend the rest of their lives living under the table just trying to make money so the taxes don't show, so they don't dock you. Now, if you're older, that's not as big of an issue because you kind of have a plan of where you're going, and hopefully you've had insurance in the past and you've been given that advice where they're telling you, yeah, you should carry higher liability limits to protect somebody that you hit. It becomes not only a thing to protect you, but for somebody else. I personally wouldn't feel right if I had an accident and crippled somebody and my insurance didn't pick it up because I wasn't paying the right premium just to save myself a couple dollars. I get it, there's a big world out there and we can't all cover each other, but I like to know and I feel comfortable that I've done my part in case something like that does happen. The third most important piece is when you're looking for car insurance or deciding what you're going to do is to know what discounts are out there. So if you've been on this channel, if you've watched any of our videos, there's a lot of comparison videos, which I'll link in here, where you can see Progressive versus Geico or Allstate versus State Farm and really determine which company's a better fit. And those are really good to look at. But in your specific area, there's what we call a profile, or what I call a profile, that a company is going to determine what risk you are to them. So when you're shopping around, if you check State Farm in New York, that's a completely different price than if you get State Farm in Michigan. Those are determined by the location and the risk of the person. Another example is if you're 16 versus 50, there's a huge difference in price because there's a lot of data backing that up. 16-year-old is a little bit newer to driving, where you're 50, you're a little bit more established. You're not like I was and kind of still am sometimes, and you just want to drive fast and drive as quick as you can, get a turbo in the car, and let's just go, right? Let's pass on the side of the road that you're not supposed to drive on. That was me in my younger years. And that just shows a good example of not necessarily all the younger drivers, but there's a good portion of us that are kind of new to that situation and we're testing some of the things. Well, those do cause more claims and more accidents. That will play a factor on the premium. So depending on what profile you're going to have, you're going to be a fit for many different companies. If you find a company that you're interested in, definitely watch my video about learning how to review them, as well as check them out on this channel because we probably already did a review on them. And that leads us into the fourth piece, which is check your driving history. Know what you need to fit in that profile, so to speak. Sure, you might be a fit for a specific company or company A, but once you get a ticket, that might not be a fit anymore. Once you get an accident, you may not be a fit. In most cases you are. If you were initially, there's a good chance that you will be going forward, but there's some companies that go crazy. There's a few companies that I've seen where you get one claim, one ticket, one anything, and their rate almost doubles. And that's just their way of saying this isn't a fit for you anymore. Unless you're willing to pay this high premium, we're a great company for you, we love you, don't leave, maybe, and let's work something out. And that just doesn't work. What you have to do at that point is shop around and find a different company that's going to be a better fit. So how do you do that? How do you take that next step and find the company that is a better fit for you? Go ahead and check the videos out here where we're going to go over those details and give you those best options where you can check out which companies are a better fit for you. I'm Mark with Think Insurance. I'll see you in the next one.